all of you to the Crypto Kingdom. And guys, Bitcoin spike. What's going on? We hit 50K. How exciting. I want to welcome everybody into the room. If it's your first time, subscribe. Also, there's a level of membership. The VIP, guys, is the top level of membership. I'm a former financial industrial, what would you say, an industry professional, pardon me. Also a former presidential advisor. And guys, it's my pleasure to bring you this information. We have been extremely accurate. I want to talk about specifically, don't pay attention to what I have on the screen just yet. We're going to go through pricing targets. I'm going to identify for you guys exactly how you can target into the best price. All of this is going to make sense. Now, in terms of this move to the upside, I want to remind everyone this move, it's been a few days since I've been on, but you guys understand, I was the one that was telling you guys from here, from this point in time, that we were going to have another leg up. If you guys will recall that. Very exciting, huh? We hit 50K. How about that, guys? I'm not sure that you got that direct in terms of the message from any other guy or any other group or any other guy, girl, whatever it was. But yeah, absolutely huge. Just a colossal move. I want to talk about our position. Angel and I want to give him a shout out. Angel, nice to have you. It's a pleasure to know you, and I'm really excited about our trading. We're in a big trade right now with Luna. Guys, we hammered back in, guys. We threw in heavy back into Luna. So congratulations to all of you who are trading and profiting during this crypto, I'd say, resurgence. Very nice. We called the recovery. I want to let you guys know that we called the recovery in this zone. People got mad at me. People in the group, people sanctioned me, pulled me aside, said, no, you can't say that about Bitcoin. I'm like, why? It's technically indicated. So we'll always tell you guys, just in line, and let's go ahead and clear this up just a bit so I can go through some of the dynamics that we talked about. And I want to let you guys know how they did work out. Let's go ahead and go through that. We had discussed Elliott wave formation. You guys understand that. We had discussed the Elliott wave with that fifth leg up that gave us 50,000. I directly and without hesitation, without mincing words, without anything, guys, that you hear on all of these other channels, guys, you understand that. I gave you the 1, 2, 3, 4, and 5. You guys remember that, right? I gave that to you guys. So that wasn't really qualified by anything. Gave you the small probability that it wouldn't do that. There's kind of the nano probability. But guys, we completed that move. I'm going to say we completed it to 50,000. Let's go ahead and go to the candle so we can see this. I want to talk about pricing projections in terms of the all-time, in terms of where we're headed with Bitcoin. I think it's going to be a good show for you guys to plug into and maybe keep. We're going to go through a lot of different techniques in terms of pricing targets, in terms of how can you get the best price? How can you trade? You guys know we had over 130 VIP members, traders from all over the world join. Angel and I have gotten a little bit more involved in actual trading. We have literally, we brought the what would you call it? Just the mojo and the flow into the trading. So we have been phenomenally successful since the pricing target, guys. If you would have engaged in the pricing target that I did live, there was a target of $4.06 on a specific, very important coin for the community, for the crypto community. If you understand what Luna is, I want you guys to educate yourself because no one knows what it is, guys. It is Tether. As you look at USDT. What is Tether? United States dollar Tether. Okay, so just so you understand, it went from $4.06. Currently, it's at 32. It's been, I think, the strongest trade of any trade in the marketplace right now, guys. In terms of the market leaders, etc., Luna has really set the mark. So I'm very pleased and very honored to be able to bring that information to you originally, and definitely to discuss that in depth with Angel in the back, etc. In terms of the planning, the deep core value acquisition. That core value acquisition is not something I pull out all the time, but definitely we pulled that out. Looking at Bitcoin, guys, current price 49,018. Very nice, guys. I have 50,000 just plastered on the screen, you guys, in terms of the kind of the thumbnail, because I'm just excited about it because we called it. That's what I'm excited about. When you guys tune in, you may have a lot of things to do and a lot of different people to listen to. You may get 15 different ideas of this may happen or that may happen. Guys, I gave this to you. You guys understand that? I gave this to you, right? It wasn't qualified. It wasn't, well, maybe, and then we have to look at the other maybe. No, guys. guys, this was direct on point hit, bam. You guys know that, okay? So that's important as you guys expose yourself to other opinions that may not be really good for you guys. I just want you guys to know there is technical analysis application. The fundamentals of technical analysis are what played out here. That's what I focus on, are the probabilities in line with the technical analysis. Guys, there's only one way to go in terms of your trading. You're going to either, you're going to go with the wrong or the right ideas. If you go with the wrong ideas, I just don't want it to cost you money, guys. And I know a lot of people lose in the market. We're trying to eliminate that fact, guys. There's no reason all of you can't win when you trade in the market. There's just no reason you can't win. No reason you can't grow your account. Shout out to Freddie. He doubled his account in 48 hours. What's up, Freddie? I know you're listening. It's nice to know you. You're a good guy. I have a good lesson here today for me as I drew it out, and for you guys as well, as we talk about pricing targets. The question now is, okay, fine. You were right about the 1, 2, 3, 4, 5, the Elliott wave formation in terms of reaching that 3-month 3-month high. Boom. Very nice. That move to the upside. We saw it. We called it. We told you about it. So I'm excited about that you can tune in and find accurate information, because that's missing in the space. A lot of hype, a lot of, it may not be as exciting. It may not be as full of that hype, but I'll sacrifice that for accuracy any day of the week. So when we saw this move to the upside, guys, we did rebound from here. It was a huge move. Let's go ahead and measure that just so we're up to date on what's been going on with Bitcoin. How big of a call was that? Let's just dial into this, guys. That was over a 10%, well over a 10% move to the upside with bigger positions, and definitely on your altcoins. You guys know that helps set the standard. That was very nice. So was happy to be able to bring that to you. I have right here our exit. Why is that? Well, guys, Angel and I had we had a pretty decent position, guys, going up through here. Not lunch money, guys. You guys need to understand that. It was a good position throughout the entirety of this. The exit right in here, I determined that I want to go through that first of all. Let's go through the determination of that exit. I want to show you this previous kind of this almost a zigzag here. This kind of level, this niche right here. Now we were over 50,000. I saw this here. And I was like, that could cause some frustration in along this level. I'd say a level of, resistance, guys, support, etc. I'd say a support turning into the resistance here, depending upon whether or not you're shorting or you're playing options or you're just spot trading. But this would be a level of support. Clearly, briefly, I thought that level of support could turn into a resistance as we turned into this framework over 50,000. Sure enough, it did. Okay, so I'm not happy about that, but I am happy that we achieved more value. I'm going to talk today about value, how you can plug into and achieve, guys, more value. We'll talk about some specifics. We won't get too mathematical with it, but I'm going to give you guys some formulations. We're having a lot of success trading, a whole lot of success, guys. So I want to talk about how you can incorporate, a value dynamic. What do you see here? You see a falling wedge, right? You do. On the macro, what do you see here? Well, you see a big falling wedge, and I've drawn this out as best I can with this triangulation. Let's go ahead and take care of that for a moment. I want to walk you through each and every level here, okay? And I want to challenge you guys to get busy with your charts, and I want you to find one single level. Please pay attention. This can change your trading. This can change the way you trade, guys. Let's see if we can get onto maybe the daily is the best. Why don't you guys, if you go to the hourly, if you go into the hourly, I think you'll see it very clearly. I don't have my dual monitors set up right now. All of these guys essentially are forming wedges, okay? I'm going to tell you that. There's going to be a constriction along the way down. The way that you can conceptualize this and you can understand this for your trading practice, guys, what's happening when a wedge is formulated? When you form a wedge in terms of the pricing action. Guys, when you formulate a wedge, what's going to be happening is you're going to be hitting your Fibonacci's. Your Fibonacci's are going to play out. They're going to play out along a line, give you some, you're going to see this, guys, when you look at it in detail. As you hit your Fibonacci's and roll along, what you're going to be doing is formulating wedges, okay? Why is that? Well, you're going to be hitting at different levels. Let me go ahead and make this a little bit brighter there. You're going to be hitting at the different levels of the Fibonacci as you go down, as orders are picked up. It's going to push the price laterally, right? And it's going to have some degree of probably, I'd say an increasing magnitude until you do break out. That's going to establish for you, it's going to establish wedge formations all over the map. You guys may not have been able to put this in context, but I thought, what can I bring them that would be kind of new, that they haven't heard of, that they haven't incorporated yet? Let me go ahead and take a look thus far. And just shout out Angel's in the house. What is up, Angel? Nice to see you, brother. Nice to see you, Julia. Nice to see you, Daryl. What's going on, guys? Definitely great to see you. This lesson, if it gets messy, it's because I'm changing time frames, and I did log out, so I don't think it saved all of my settings. That's okay. But I want to let you guys know there's some different things we're going to go through today. I want to talk about this first move, guys. As you remember that 1, 2, 3, 4, and that move up, that 5 that I talked about before it did occur. Bam, right? Okay, that was a very nice move. That was a 3-month high. That 50,000 definitely giving us the momentum, guys. In terms of people want to project prices, guys. I'm just I put $50,000 on the cover. Guys, if you don't think Bitcoin's going to go to 100,000 at some point, I really question in terms of your ability to absorb the market. We have been through an enormous and are still in an enormous bull cycle. So in terms of that, I do always tell people as well. I tell them, in terms of there are 3 levels right now for Bitcoin. People want to know, should I get in? I tell them there are 3 levels right now for Bitcoin. Just go ahead and stick with 45. If you want to stick with 45, okay, stick with 45. We're at 50, but stick with 45. Then there's 30. Then there's 15. Now you decide, in terms of your coverage. When people ask me, should I buy Bitcoin now? Should I buy a whole Bitcoin? Should I buy 10? Whatever it is. I tell them, look, there's 3 levels. There's 45, there's 30, and there's 15. You need to be prepared at every single level to take advantage of the volatility. Will it get to 15? If it could, we would make so much money, guys. You understand that? So the only reason I talk about it, if it could, right? Because we just made a huge gain here with larger amounts of money. So could it get there? I mean, you want to see some people buy heavily? That would be me. There are so many barriers towards it getting towards a figure like that. People doubling down and tripling down at the lower levels is a primary barrier. That's what we did. That's what we do. That's what the big guys are doing. So in terms of letting it get down there, guys, the odds of it getting down there are very low. But I do tell people, think of 45 and think of something like 30. It was just at 30. Can you maximize your exposure at 30? Are you willing to do that? Can you crank in an extra 0 on your position? If you want to put in 50,000, can you throw 500,000? Or could you throw, say, if you put 50 in, could you throw 250 in at a lower level? Can you cover your upside exposure? Because the volatility in the market is just a profit maker. You guys understand that? So that did work out in terms of the Elliott wave formation. I'm very excited, though I'm not surprised. I gave it to you in no uncertain terms. You guys know that. It wasn't, when I went through that, I reviewed the tape today. I sent that out in the form of just a small video. And guys, I told you directly. I'm like, this is it. This is the probability. The 5, is going to happen, right? That's the probability. That's technical analysis. And I drew the 5, and bam, there we go. So I'm glad to be able to bring you guys that degree of information that's not clouded up with possibly this and we have a possible contradiction here and there. No, guys, we don't need that, right? I just don't think that we need that as much in this space, as much as it is it's just irrelevant, guys. As you look at the other guys that are just hyping up 15 different ideas at you, guys, that's so irrelevant for you. You don't understand how irrelevant that is. What's relevant is Angel in the house. What's up, brother? Nice to see you, and always supporting Chief Benefactor. We just love that guy. Is up over $15,000, and just love you, brother. Love you. We're gonna kill this market. We're gonna have fun with it too. So the lesson today is gonna be, just kind of a special treat. I want you guys to really focus on this as I start to pull these out. You're gonna start to see. Oh, hold on. That's right, guys. Hold on. Look at this. And Angel, just pay attention if you can, and everybody else in VIP, please pay attention. If you're just tuning in for the first time, guys, this is the level of TA that we do. I'm talking about the pricing targets for Bitcoin. How do we establish pricing targets? How do we establish, what good entry points are? As we look at this, let me make this a little bit stronger here so you guys can definitely see. Now you see that wedge, that formation of what is all over your screen, guys. I want to just talk about that in the context of these wedge formations are the natural byproduct, guys. They're the natural byproduct of people executing orders along along their Fibonacci's. Okay, so I want to talk about that. You guys understand Fibonacci's? Absolutely. Let's go through this. You guys are going to love this. I just think you're going to love the dynamic that we're able to put this in, and it's just nothing you're going to get in terms of, like, we cover things like don't be overexposed in the market. We cover things like, what does your portfolio look like, and money management issues. Like, you can read a self-help book on money management. No one wants to talk about it. I don't want people getting like smoked out of the market at all. Not at all, right? We don't want people getting wrecked or washed out. It's just not. It's not in the vocabulary for a reason. Often read here. But look at the formations that you start to come into, okay? And just starting to come into. What does this, is a giant zigzag, guys, but what does this start to formulate? Well, it starts to formulate kind of what we would see as kind of a wedge, right? We would have kind of a constriction, right? A constriction channel. We see a breakout and a move to the upside. We attempt thereafter to continue, and the premise here is we have kind of two zones. One is higher highs and higher lows. The other is a wedge, okay? Higher highs and higher lows. Or we could also say, or Fibonacci's, okay? Because the Fibonacci's, those orders at the different levels of the Fibonacci's are what are forming these wedges, okay? So those are the opportunities, and if it's easier for you to think in terms of these wedges being just orders at the Fibonacci, that's great, guys. The different Fibonacci's, as you guys understand the Fibonacci tool, I know you do, guys. As you understand that Fibonacci tool, essentially to the degree that this would be compressed up, I just want to show you this specific level. Look, those would be your Fibonacci target levels. We could mark them out very easily. You could have your, on the right-hand side, pardon me, you'd have your 43,552, 43,022, 42,648, bam, bam, bam. You would set your orders at these different levels. So as those are picked up, I want you guys to see as they're picked up at the different levels of this Fibonacci, and I'm just going to brighten this up. I'm going to take some time because I want you guys to understand this. As the orders are picked up along the Fibonacci, guys, it's giving you a wedge formation, okay? So these wedge formations, I think it's easier for you to think conceptually if you don't want to enter in all the time, if you just want to play with the market and see, maybe I don't want the exposure, because this is one thing. Maybe I don't want all the top line exposure from all you understand this, guys. Listen, please listen. I don't want all the exposure from the top levels of the Fibonacci. I don't want to go through the pricing targets. That's lost money to me. Okay, the solution today that I want to bring you in line with this Elliott wave theory, okay, guys, that we remarkably, not unremarkably, but in the entirety of the space, it's remarkable that we can bring some good information to you. I'm very happy about that. It doesn't go without saying thank you, guys. I really appreciate that. If you could hit the like button, if you just showed up, that helps me know that I haven't done this for a few days. It helps me know that you like these, that you would like these in terms of me telling you where the pricing is going based on probabilities, the overwhelming probabilities, in terms of me telling you guys a workaround, instead of doing Fibonacci's, all the time. If you like this information, please hit the like button, because it lets me know, well, maybe I need to stop trading right now with me and Angel. Maybe we need to stop trading and I need to give kind of an instructional lesson. Let's see if we can circumvent hours, maybe collective days of the work that you guys are putting in on your Fibonacci's. This is the go around today, okay? So you guys know I'm a former financial professional, and guys, I don't mess around. So if you guys, in terms of bringing you, I know it was a few days off, in terms of bringing you guys something that's very, very, I'd say, very important for your trading skills. Bingo, okay? As you look at your Fibonacci's, because I have gone through for a long time, and I haven't really shared this information. I just wanted to bring it out. In terms of the Fibonacci's, we've been heavy on the Fibonacci, so you understand what a golden pocket is. So you understand the 78.6 and that key 86 level, right? That 86 level, that 86 level, which no one knows about, right? It's a nice level, right? No one talks about that level. So as we look at that, a way around your Fibonacci's, and in terms of gauging the price action, it's going to be one of two things. You're going to be formulating a wedge, period. You're going to break out of that wedge. When you break out of that wedge, what you're looking for is higher highs and higher lows. You're looking for higher highs and higher lows the entirety of the time, higher highs and higher lows. When that breaks down, when the higher highs and higher lows break down, you're getting into another wedge. Okay, when the higher highs and higher lows breaks down, you're formulating another wedge. Okay, why is that? Is it exactly all the time? Guys, I'm just going to tell you, go ahead and test it. Put it through all the dynamics that you can. See what you come up with, okay? I'm going to tell you, see what you come up with. You're either formulating higher highs and higher lows, guys, or you're coming into the formation of a wedge, and that's going to be a lower low. Picked up by what? picked up by a Fibonacci, picked up by a pricing target. It's going to give it some positive price action, followed by what? If it's another lower low. Guys, if it's a lower low on the second one, you're into that baseline formation of, look at this, of that level of support is going to be dictated by those hits along the Fibonacci. You guys see that? By the different pricing levels along the Fibonacci. So this is kind of breakthrough material for the VIPs, for all you guys, for the members, etc. Angel, I hope you appreciate this, as you can just understand there are different tactics and techniques that we can apply to the market. There are different, and it's not just on this portion, guys. It's not just on this portion. I'll bring this over to this area here. Even within this area, I'm going to tell you, you guys are coming into contact with higher highs and higher lows, or you're formulating a wedge. Okay, when that breaks down, you're formulating a wedge. Higher highs, higher lows, or you're formulating a wedge. Okay, higher highs and higher lows, or you're formulating a wedge. The key indicator here is once you break out of that wedge, you're experiencing positive price action. That is an area where your trades are indicated. Okay, yeah, that's an area where your trades are indicated. You guys know a falling wedge is bullish, right? You guys understand that falling wedges are bullish. As a matter of fact, even around the top, even you guys in terms of the price action of Bitcoin. Let's look at this, guys. It's either the falling wedge or it's the higher highs and higher lows. If it falls down, guys, and always using as the cut, guys, using as your take position the break of the trend line. You guys know that break of the trend line gives you your take. Guys, it's a very easy formula to use if you'll plug in and start to see things this way. I'm just going to tell you guys, this is some advanced stuff that not everyone talks about, an overall strategy like this. As soon as your trend line is broken, right? As soon as your trend line is broken, you'll be able to draw them everywhere. But you're going to get into, you got higher highs and you failed, you got this swing failure, etc. Here you've got a problem right in here. You're going to know, well, we're getting into a wedge. Anytime you fail your higher high and higher low, guys, you're going to be getting into a wedge. Now, how can I just say that? Because of the Fibonacci's. Each and every your pricing targets along the way down, each hit that establishes this line of support along a wedge is a pricing target. It's a hit at a pricing target where orders are. You guys get that, right? Yeah. So that's a nice way to think about it in terms of, instead of just always thinking about, well, I have to hit my pricing targets. I have to hit the Fibonacci's. And people want to know which level is it going to pick up on? Should I go heavy at the top level? Should I not go heavy at the top level? That's the key indicator, guys. Let's talk about what do we got? You're joining VIP. Kent, that's awesome. We would love to have you in VIP. We would definitely love that. So we try and bring, just advanced, I'd say the most advanced TA and most accurate TA. And no one's going to talk, no one, guy. I'm going to tell you guys, I've been around some of the best traders, etc. Some advanced traders, they're not going to know this. Just test this. Please spend 10 minutes with a price chart. Either look for higher highs and higher lows or look for a wedge formation. Apply it, back test it. Look at what you're doing in terms of what you're trading. Pick your favorite coin. I don't care your coin. I don't care if it's Bitcoin. I don't care if it's Ethereum. Whatever in the world it is, VeChain, whatever, guys. Whatever it may be. Apply this practice to it. Try and look, because the pricing targets are getting key right now. You guys know that. We just hit the 50,000. Absolutely. I'm giving you guys a dynamic, and you'll see some of these are severe. This is the most severe wedge I've ever seen in my life in terms of this move down for Bitcoin. It's pretty tumultuous there. So, but I just want to give you guys the confidence as you guys apply this to your different to whatever you're trading, guys. You're going to see conformance, and these are some of these I really just drew on the fly. You see that, guys? Absolutely. You see the wedge formation, right? Okay. What did you broke out? Then you started to have what? You started to have higher highs and higher lows. Period, guys. You worked up until, well, you had a swing failure. Bam, what did you have? You fell into a wedge. Then what happened? Well, you had a higher high, and then what happened? Well, you had a lower low. What does it tell you? Immediately, what'd you do? Well, you broke the trend line, right? You broke this intermediate trend line, right? So as you break this trend line, bam, that's a take, right? You guys understand that. So that the breaking of the trend line is going to indicate we're on into the pricing targets, the Fibonacci's. People are going to be picking up orders at the different levels of the Fibonacci's. Let's just draw this out real quickly so we can kind of get an idea and a flavor right here. But you'll see on the pricing targets that are inherent within your tools, guys, and trading station and anything you're using. Now, whether or not if you're trading Forex or anything, guys, you have your Fibonacci's everywhere, right? These are your pricing targets, your pricing pricing levels, we would mark them up just bam, bam, right? We would just literally, and I distribute these to the guys in the back. You guys are very familiar with them. You guys know that. So these would be on the right-hand side. Bam. We've done some heavy targeting. So the easy way around this is we're looking towards advancing the VIP. As I'm looking, I was like, I wasn't, around for a couple of days. We were trading heavily, guys. Trading heavily, entering into large positions. I'm in a position right now in Luna. Angel and I are in a position right now in Luna. We threw heavily at it. If Luna's going to wake up, it has been good enough to us. We're gonna throw in heavy to it. I just want to let you guys know that. Don't do what we do. It's okay, guys. You always always. Let me say this: heavy position with backup resource capital, heavy foundational capital behind, or the system doesn't work, guys. You have to have that ability to double and triple down. Just look at this again. Let's just go through. This was around the top of 64.86310 on Bitcoin. You guys understand that? Even within the top formations, we're looking at pricing targets, guys, that are forming. What are they forming? As people go down and pick up orders and they profit at each of the levels of the Fibonacci, they're formulating falling wedges. Okay, so these falling wedges are just crucial. As soon as you get a swing failure, as soon as you stop making higher highs and higher lows, right here, bam, and what are you doing? You're breaking the trend line. Right here, you're breaking the trend line. That tells you we're going to formulate a wedge. Guys, test it. Just test it, look at it, see what you're doing in terms of your entries, okay, in terms of where you're picking things up. If you want to increase your position on the breakout of a pattern, guys, the breakout of a pattern frequently is a falling wedge. That's why I have this marked up so aggressively, is to teach you guys this tonight, because it's a big go around, and I just wanted to bring some value to the VIP. I'm like, what can I do? I wasn't around for a couple of days, and that's okay, guys. I just, we had given you guys the move up to 50 in terms of that. I was very excited about that, but I wasn't surprised. The probabilities are the probabilities. I didn't want to confuse everyone with it could do this and it could do this, and watch out, it might do this. No, guys, that's not me. That's not us. We're having good returns, and there's a reason, because we focus on those probabilities. So this move up, let's go ahead and remeasure exactly how far we have moved up. You guys know in the back we were able to bring you this nuance, guys, is small, so important. What was it? An ascending triangle, literally down here at the bottom, guys. It was just it was the beginning of an ascending triangle in and around the price of, I think it was 29,750 that I brought to the back. In terms of the back, I mean the VIP in the back. I brought this formation just right here. Okay, this little beginning, an ascending line of support was indicated just by this move right in here. This was an hour. Literally, you had to watch it. Literally within like an hour, we looked at this. But just this formation right here, I saw this higher low here, essentially the rising line of support. And I said, guys, that looks like we're forming an ascending triangle. Excuse me. So the ascending triangle, and once it started to fly, it was very clear this is something special. So that happened around 29,750. I was able to bring that to the group in the back. Very excited about that. Look at all this price action, guys. Beautiful, beautiful price action. As we go ahead and measure this out, let's go ahead and take a look at the overall gain, guys. Since then, 66% currently. Since then, maxing out at over 70%. I booked at over 50. I want to let you guys know. I wanted it in the order book. I just wanted it. And Angel and I's order book that we booked at over 50. And I want to talk about why also that was indicated. Now, what are we doing here? Well, it looks like what's going on here, we're formulating a wedge, a falling wedge, right? So we're going through these falling wedges in terms of if you don't want to sit and pepper in, if you don't want to increase your position at every single Fibonacci, because that's a frustration, right? For a lot of people who don't have time to trade, etc. You might have time to say, well, when's the next falling wedge going to come around? Because every time, guys, you're either formulating higher highs, higher lows, or you're formulating a wedge. You guys know that? The Fibonacci's are going to formulate a wedge. Higher highs, higher lows, basically move up, and you're formulating a wedge. So use this, guys. Back test it on your own charts. Take a look at things. As soon as you're out of these, guys, it's a nice take. It's a nice, I'd say a nice entry. Let me say a nice entry. A nice time to enter into a position once you've established that, yeah, it looks like we are. And you guys, this was kind of quick draw, but definitely you'll see that line of support is going to be so clearly indicated. And this is just crucial as we're looking at Bitcoin price action, guys. You guys understand that. If we look at the price action, you'll no longer look at retracement as a bad thing. You'll no longer look at it as something to stay away from. You'll just start looking at your entries. It's like, well, where's the next falling wedge? Crack your knuckles out, guys. Well, where's the next falling wedge? That's all I have to determine, because each and every level, I'm going to say, guys, each and every, let's say, what do we say? Each and every Fibonacci that is hit, guys, along the line here, as it's hit, it's going to formulate, guys, because it hits and it gets some price action to the upside. It hits and it goes laterally and gets some price action to the upside. It hits, it goes laterally. That's going to give you guys the formation of a support line. So as you look at your entries on Bitcoin, on any of your coins, guys, use this to the degree that you would like to. I'd like you to back test it, meaning run it on some other of your coins and see if you find that useful. It's one of the most productive things that I can think of in terms of trying to increase your efficiency and trying to ensure that you guys are the number one trade group around the VIPs, guys. I just want to bring you guys the most sophisticated level of approach and strategy that I possibly can. I want you, because you guys are part of the team, you're part of the group, I want you to be number one. I want you to have strategy that no one else knows. I want you to, in terms of that, I want you to tune in and learn that. So as we look at, well, this would require its retracing. Yes, it would require pricing targets. And what are those pricing targets going to do? Well, they're going to skip along the different levels and pricing targets until we have a breakout and start to establish higher highs and higher lows. It takes care of the question of retracement. It takes care of the question in terms of where should I get in? Which level is the most key level of the Fibonacci retracement pricing targets? You guys realize this is a breakthrough idea, right? So I want to just bring it to you. If you can apply it, I'm going to say that if you can apply it, that's the next breakthrough idea. Also, we've been very fortunate. I want to talk about this, guys. In terms of this top level trend line, things have wanted to return to it. If you guys look at that, the top level trend line here on Bitcoin, it has just been like a magnet, right? It's just been a magnet. That's the definition of a trend line, but such a strong trend line. There have been some different, even discussions in the back, guys, between you in terms of like, what's the real thing going on here? A lot of people are missing the boat in terms of setting their orders. Here on the bottom, I want to let you guys know, a lot of people are missing all these targets. Well, it's supposed to come down here. No, guys, focus on your falling wedges. When you get a breakout of that falling wedge, that's your entry, guys. That's going to be your entry. When you can start to establish your higher highs and higher lows. And it may seem a little bit skeptical now, but once you get on the smaller time frames, guys, it's going to work out very well. I really believe that's going to work out well for you. So in terms of the current price, 49,110, we did make it up to. Let's go ahead and measure this. Hope you guys like that information. It's just different information. This is not in the book yet, right? It's not in the book yet. We'll see if we can write one, put it in there. It's good stuff. I'd love to have some of you guys you guys could probably write it. I'll tell you that. Look at what are we forming, guys? We're formulating a falling wedge, right? So is it guaranteed every time? Go back test it, guys. You guys go back test it. Why? Because look at this. What are you hitting? Well, we're hitting the pricing targets on the Fibonacci. What are they going to formulate? They're going to formulate you guys get it? So look, most people don't know also, like, well, when is the appropriate breakout, right? When do we know that we're really breaking out? Guys, I would, establish these falling wedges in line with pricing targets, maybe that other people are catching on to, if you want to. Now, there's more value to be gotten at the bottom, at these bases, guys. As we look at these bases, there's more value. The support, right? There's more value at a lower price here before the breakout, but there's a higher probability. I'm going to say a more of a assured technical entry once this breakout of these wedges does occur. And I don't think you'll find a single instance where either we're not setting higher highs and higher lows, or we're formulating a wedge. Because think about this, either you're going up or you're retracing. Going either at the micro or macro level, we're either going up or we're retracing. If you're retracing, you're hitting pricing targets. Copy that. If you're hitting pricing targets, guys, you're going to be skipping along these specific levels of the Fibonacci, right? So that's going to give you this formation here. So some people may want to know, well, I guess the question would be, well, what if we did something like this? I'll say that's valid. I will say that's a valid question. You'll need to gauge. What I would say is you will need to gauge one thing. If something is early, if you're going to reckon with something early, now you want to go ahead and really, before you started to really push, if you want to say this is the wedge formation early, you're going to really need to reckon with your trend line. When your trend line then is broken and you're not into the higher highs and higher lows, that's where the alarm goes off, right? So as we look at that, that's a real feature of this strategy, guys. And it's more the pricing action. It is more just the facts as they apply to the charts and the market, to where it's a different angle for you to look at, where you don't have to be busy with pricing targets. Now you can be busy with either higher highs and higher lows, the price is going up, or if the price is going down, you can know that the Fibonacci's are going to formulate, guys. They're going to form some sort of a falling wedge, right? So when you break out of that wedge, what are you going to do? When you break out of that wedge, guys, just remember this previous example. If you broke out of it early here, you said this is a wedge already. Don't get too anxious. Let the wedge form. Let it go ahead and do it. Take its course, guys. So as we look at this, I also want to measure out something today. Why would we buy and sell? Why did I sell just above 50,000? Okay. Why did I exit the position and liquidate essentially, guys, the entirety of the position? Why? It was a nice position, nice gains, huge gains, guys. It was a nice position. I want to let you guys know in terms of size and in terms of the gains that had occurred. As we look at this, guys, this is not down much. It's down maybe 3%. Bitcoin's down maybe 3%. Doesn't mean at all that I'm bearish on the market whatsoever. Not at all. But if I can gain I'm going to gain two ways. I want to let you guys know. In terms of this, I'm going to gain because I'm not going to lose the money. I'm not going to lose the value. Let me say lose the value in the account, right? True. So I'm going to take profit at the top. Right? I'm going to take profit at the top. Then that 2% that I just saved, that I just essentially, guys, I held on to that. Understand, as that 2% is recovered, I'm going to make back 3.3%. As you fall down, guys, if you look at you need to understand this mechanism. If you are to go from the top, let's say to this bottom line right here, this bottom line Fibonacci level, that's 4.04% down. I'm going to measure it up. If we go from here, from 4.04 up, guys, you're at 4.36. Okay? So that degree, that percentage, first of all, you're not losing that. Second of all, and I'll go through the trend line to make sure you guys understand exactly where the takes are on these guys. So you're not losing that 4.04%. And when you regain and recapture that price, you're going to be gaining more than the percentage lost. I'm just going to say that. There's going to be a higher percentage gained on the way back up because you're dealing with a lower price, okay? If you think about $1, think about $1, just let this register. If you're thinking about $1, okay? If you add on 10 cents to $1, okay? That's going to be 10%, right? Now, let's say if you have $10, let's say a higher price, you would have to add on $1 to that, right? You would have to add on a much greater amount than 10 cents to get 10%, right? So essentially the lower price, guys, a single incremental move like 10 cents is going to be a higher percentage, okay? So that's important as we capture a lower price here. I hope I just described that well. I think you guys understand. I always say, look, if you add $1 to $1, it's going to be 100%. If you add $1 onto $10 up top, it's going to be, $1 to $10 is 10%. So it's either 100% or 10%. That's the dynamic in play as you can create more value at each and every level. It's not to that extreme. It's not that the analogy is not perfect, but you understand at higher prices, it takes more price. It may at some point, like with Bitcoin, now it takes thousands of dollars to move, to move 10%, right? Right. So used to, if you move $1,000, we would make 100%, right? Back in the beginning of Bitcoin. So understand the lower price, and it may be marginal, but whether or not you understand, or whether or not I've explained that perfectly, guys, understand you're not losing this amount, okay? You've taken at the top. You're not losing this amount. Then you're able to gain more by the move, okay, from this position. So if you can't convince yourself, well, I'm going to hold. I want to hold on to it. Because if you can't convince yourself that it makes sense in terms of not experiencing the loss, just consider the fact that you're going to be able to gain more. You're going to be able to increase your profits just recapturing the moves. You're going to be able to gain more, right? Okay, whether or not you recapture the entirety of the move, each and every increment up and every dollar up is going to be a bigger amount for you because you have a lower price, okay? Those lower prices are just crucial, guys. They're just really, really crucial. So as we look at that, just some dynamics coming into play. We're talking about wedges. If you guys just showed up, hit the like button. I need you guys to hit that. Let me know that you guys appreciate the moves like the, let's go and cover this again. You guys know that we definitely just gave you flat out the Elliott wave, and it worked out beautifully, guys. You understand that? It was just very, very nice. Gave you this 1, 2, 3, 4, and I drew it up before anybody wanted anybody else's business. It's like, here you go. It's gonna, there we go. Right? The probabilities were there. Right? It wasn't in line perfectly with the channel formation. I didn't, I didn't need that to occur. Essentially, we did update throughout, and I didn't need that. Elliott wave doesn't need that, guys. It doesn't need that. It just, we have that 1, 2, 3, 4, and 5. We're on the 5th level now, and we're talking about the entries. Okay, how can you design a profit system for yourself in terms of trying to, enjoy these moments where it's retracing? First of all, you need to enjoy your takes. Okay, you need to enjoy these. As we look at this, guys, you need to enjoy your profits. You need to take, right? You need to close your trades. You need to put that in your pocket. You need, it looks good on the screen, but you guys know, as you trade, guys, that once you capitalize a trade, you book that positive trade. That's when it's your money, right? You know that. So, if you can see just this downward price action, it doesn't look bad anymore as long as you know these wedges that are formed. Let's go ahead and change this to the line chart, okay? As we look at this, these wedges that are formed are the only thing that's going on aside from what? Aside from us achieving higher highs and higher lows, okay? Higher highs and higher lows, higher highs and higher lows. Higher highs, and we skip down here. There's probably another wedge in here. Higher highs and higher lows. So it's and let's see. Let's go ahead and draw this out. I'm going to really zoom in on this one now. Because I said it and I'm teaching it, so we want to see, is that definitely a wedge? I don't know. Let's get into it, guys. Would you guys have identified that as a wedge? What do you think, guys? I'm going to tell you, every time you get into this, guys, you're going to have a very difficult time finding something that's not constricting and not complying with a wedge formation. Why? Because it is going to be a compression, and it's going to have multiple levels that are going to designate it within. And is it perfect? We'll have to work. It's kind of a quick draw. But it's another wedge, guys. It's another wedge. We can dial in on the time frames to really get in on that. Another wedge formation. I'm going to say it's going to have a barrier at the top, this line of resistance, and this line of support. To the extent that it's maybe a little bit skewed, let's draw that out like that. Perfect. Is that good, guys? I think that's good. So I don't want to leave this out while I'm kind of teaching this in terms of the price action to the upside on the breakout of the wedges. Okay, price out to the upside on the breakout of the wedge, price action to the upside on the breakout of the wedges. Okay, and this cut it close here. I'll just say this cut it really close here in terms of the higher high and higher low. It still conformed barely, but it sure did. Higher high and higher low. Higher high and higher low. This is one of the benefits of a bull trend, guys, of the positive price action. This dynamic works perfectly. I'm going to say the entirety of this year, essentially we've been in a bull trend, right? So you're not going to find an instance where you don't see either a wedge, a falling wedge, or higher highs and higher lows. Okay, all higher highs and higher lows, guys. Positive price action. Then we get into I'd say a distinguishing feature here where we break what? The trend line. What does that mean? That means you failed to set a higher high, or let's say a higher high or a higher low, right? Your low went down. What does that mean? Well, the take is at the break of the trend line. Period. Why? Because you're about to formulate a wedge. With what? With pricing targets. And you don't have to take them, guys. You don't have to you don't have to execute the trades. Okay, you don't have to execute the pricing targets. I'm giving you a go around today just so you understand what's formulating these wedges. What's formulating these wedges are the Fibonacci targets with people trading all the time. Okay, so let them get into it if you want to. And if you'd like to trade each individual level, that's fine. It can be difficult. People don't know when to exit. They don't know, well, how big is this level going to go? Now, as you formulate the wedge within those pricing targets, that may give you some more reassurance in terms of either this is going to take at this, now you're getting into it, guys. Now, either it's going to take in line with this level of resistance here that's been established by the multiple points, the multiple hits, or it's going to break out, right? Now, as soon as you have a lower low, guys, as soon as you have a lower low, and we can redraw these a bit if you guys would like, but I want to reinstill this premise to you because I want you guys to be the best traders, and I mean that, guys. I want to give you guys some detailed, pricing entry techniques that other people aren't using. Yeah, we've been hanging out a long time, right? And I'm trading a lot right now. Angel knows that. We're killing it. We're doing well. We're doing very well, and I'm excited about you guys doing very well. As we look at the higher highs and higher lows, or the falling wedge, what did we fail to do? Well, we broke the trend line, right? What did it go into? Went into a falling wedge. So you see what's happening. You're either getting positive price, or at the break, you're starting to formulate a falling wedge, guys. You guys see that? That's just the case. Either you're getting positive price, or when you break the trend line, and guys, this is towards the top. This is towards the top of the price action. Let me go ahead and there we go. This is towards the top of the price action here, the 64.86310. You guys see that on the right hand side. Even towards then, guys, you either keep in the trade at the trend line, or bam, you're busting down, you're breaking the trend, you're starting into a falling wedge. Guys, it works throughout go back test this on everything you've got. Go into the nuances. Anytime you've got this retracement going on, what are you doing? You're hitting, people are hitting, they're hitting the pricing targets. What is that doing to the price action? It's pushing it laterally, and it's giving some force and effect to the price. So what's it forming? It's going to formulate a wedge, right? It is. It's going to formulate a wedge. Continue to test this, because I want you guys to experience the positive price on the breakouts. I want you to hone in and zoom in on the next pricing targets that are coming around. If you don't want to trade them anymore, that's fine. What would you look for? Well, we'd look for falling wedges, right? It's just going to be a downward constriction of the price action. That's just is going to be what it is. We do have a variation here. We have such a severe pour down, and this was a rare event. I'm going to say this is a very rare event. This breakdown for Bitcoin, where it dropped over a period of just not too long. It dropped some 45% within I'd just say a week or so. That was a pretty aggressive move. Still within that, you see the wedge formation. You see a bit of variation, and the variation very quickly, guys, wants to pick right back up into that wedge. You guys see that? Absolutely, right? Very interesting, isn't it? It's just like a magnet wants to get back up in there. So I would challenge you, if you see through the entirety, there's an angel just kicking it out again. Very nice to see that angel just rocking it. We appreciate that so much. Top benefactor, and guys, what a trader, what an eye. I love you guys being around him. He has such an eye for value, and guys, he knows the market well. He knows the coins well. He knows the coins that you guys don't know. He knows them well. I'm going to tell you guys, he's been around Bitcoin. Just so you know, he's been around Bitcoin since like $7.79. Yeah, he knows all the coins you guys don't know, right? I'm just going to tell you guys. And so he's a huge resource. I'm just going to brag on you a little bit. Angel, thank you so much for supporting us. That is just a big show of support for all of you, so that we can bring you guys this information. It lets me know that these are important to him and that they're important to you. I ask that you hit the like button if you can do that. That does let me know. If I get like 30 likes, or I get like 20 and people just don't like it, why should I stream if people don't like it? I'm just going to tell you, why should I waste my time for people that don't like advanced trading strategy? You want to sit there and don't like it? Like, you don't want to make money? Maybe some of you don't want to make money. If you don't want to make money, I got, you're on the wrong channel. You're not going to like it. You go. If you don't like to make money, you just hit the highway. It's going to be okay. We're going to focus on making money and strategy that helps us achieve that. We want to bring you accurate and timely information so that you can maximize your profits. This strategy here is going to work well for you. I think it's going to change the dynamics in terms of what you're looking at. It's not aesthetically perfect. It's not really aesthetically pleasing, I'd say. I have decided to, kind of attenuate this specific wedge here. Within this, I want you guys to know that this is not a variation from the strategy. And this is just, guys, it doesn't go without saying that you're either higher high, higher low, positive price action, or retracing. Retracing, you're going to run into a falling wedge. Breakout, positive price, right? Swing failure to the downside. It's concurrent with what? It's happening along with a break in the trend line. It's always going to establish what? It's going to establish a falling wedge, okay? On the breakout of the wedge, what do you have? And this was minimal during this time frame. I remember this very, very struggling portion. You had minimal higher highs and higher lows until what? Barely. Until what? Until you broke the trend line. Your take. You're out, right? Correct. Each of these is a trade. Okay? Once you break that trend line, what are you formulating? You're starting to formulate a falling wedge, okay? So in terms of this, and you'll have to get into this. You could even this could be a difficult one. Let's talk about this. This would be a very difficult one to play. And let's redraw this just so we're accurate. I quick drew this beforehand. I'm like, I want to go through this strategy with them, and I want you guys to understand what the strategy is. This was a real brutal moment. Do you guys remember? This was a pour down, really heavy in Bitcoin. Yeah, this was a severe drop. Bam. People, not necessarily prepared for that. I think we drew this out on an extension level below at the 61.8 1.8. If you guys will remember that, we drew this out at an extension below. I extended below to hit a pricing target given the intermediary pricing action. It was an interesting move that it decided to make. We picked up that bottom line, that ascension right down in here. I'm glad it went down to that level because people in our group have orders, bam, right in here at the breakout. I'm very excited about that, in around the 29,750, right? So this was an interesting level to look at in terms of our strategy, guys, that we're discussing, just discussing. If you guys don't like it, you don't have to use it. I just want to reframe your mind around thinking, well, we have to hit our pricing targets. You know, we're in a zone. We have to hit a pricing target, right? Okay, if you don't have those pricing targets, you don't want to enter into those, if you want to know when should I buy, guys, use your wedges. Now, this was a circumstance here, the breakout of this wedge, a pretty severe wedge, and you'll see the levels right here, boom, boom, okay, of the line of support, the line of resistance clearly indicated. We could probably redraw it perfectly, quick draw. In terms of this, guys, the breakout here really didn't give you much. And when did you know that it wasn't going to be a good trade? You guys understand how many good trades you could make doing this? You understand how many good trades you could make doing this? Well, here, you know, this was just a flat line, you know, real quick and easy. Yeah, this ain't going to work. Stop loss, bam, right? Absolutely. So as you look at that, guys, it's just these are all trades, right? Aren't they? Yeah, they are. It's either positive price action or a swing failure. Swing failure just means that you're not setting higher highs or higher lows. That's all it is. You're setting a lower low, right? So in terms of that, we got into, let's say, just this zone in here. Yep, we're getting higher highs, higher lows, and whoop, there we broke the trend line, right? There we go. We broke that trend line. So thereafter goes into, you know, kind of an express wedge formation. So some of these may be tricky. Some of them are going to be, I'd say 80% are going to be very easy for you to identify. The negative price action is going to fall in line with, it's going to conform with, let's just go ahead and draw this up, with Fibonacci levels, guys, with your levels, your pricing targets. So as you hit those, as they're hit multiple along the way down, what is it formulating every time, guys? It's going to formulate a falling wedge. So those are going to be your indications of entry here. This was a difficult one. You know, this would be one. It's like, well, are we going to break? And guys, I'd say, you know, are you at a negative? You know, if you fall below your entry, you can use that. And I say the degree of risk calculation is interesting here, because you might say, am I going to use this bottom line as my stop? This was probably the most difficult level that I can identify right now. If we wanted to, you know, formulate a wedge out of that, I don't think it's fair for for us to discuss this. This was just a difficult level. Now, what did you do though? You did. You did break through a really kind of difficult area here. You may have a threshold or a tolerance. I would recommend that in terms of the entry of your price and what you're willing to take, right? Because, you know, on the breakout, just look back through these guys. In terms of the entirety of the price action, you should be able to establish essentially a threshold upon a retracement. Well, I'm definitely looking at some degree of retracement or some degree of profit. If it's not in profit and it's going to set another low, I don't want to be a part of it, right? So that will assist you as your standards will assist you in this, in exiting a trade. You may say, I want this higher high and higher low at a 90-degree angle. Okay, not a 90. I'm sorry, a 45-degree angle. That'd be nice, yeah. I think we all do, don't we? Sorry about that. Yeah, I think we all want these at 90-degree angles. We get that a lot, don't we? We certainly do. Bitcoin's decent at it, right? It is, huh? As I draw that, we kind of laugh about it. It's not off by much. As we look at these Bitcoin spike, et cetera, I guess we can say it, huh? We can. As a matter of fact, right? We can. Some of these are literally like that, but of course we all want price action like that. But the higher highs and higher lows, that indicates we're going laterally. And guys, as you look at that, just it's a beautiful expression. But this is a threshold move here. What's your threshold take, right? You may have a threshold take. To definitely make sure that we're not doing. That we're not. Okay, I just got the signal that it is time to go. I hope that you guys enjoyed this brief time that we spent together, and I hope it helps you in your trades. This is London. We'll meet you in the back in the Twitter, and you guys take care of yourself. Make sure you eat well, sleep well, and make sure that you take care of those relationships that you knew were worth investing in before you started investing.